It's Wednesday evening, February 3rd. The market's been closed for a few hours, and it's time for the weekly swing trading video. Hello, traders. We've had kind of a rough week here. Everything was looking like it was going to come up roses for us in January. We were going to be up about 15%. All of our bullish put spreads were set to expire last Friday. We had a couple for this Friday. Didn't work out that way. We had a big market drop last week. Wednesday and Friday were huge down days, and I'll bring those both up and you can see the drop that we had. Big drop right in there, tiny little bounce, and then the bottom fell out on Friday. Took us below the upward sloping trend line on the SPY that dated back to November. We closed below the 50-day moving average, and here we are with three bullish put spreads expiring Friday. We did what we had to. We closed the spreads down. That was a good thing. Lyft would have cost us a lot of pain. Walmart would have been a 100% loser, so we avoided those situations. We also bought some VXX, and we hedged ourselves with that position. We also had NVIDIA. We closed that out for a scratch this week. We sold it for 50 cents. We bought it back for 50 cents. The stock has been rallying, which we still had it on, but we were erring on the side of caution. We do still have Netflix on, and I'll address that trade in a moment. And we have our VXX position on. First, let's take a look at the market. I want to show you the micro price action that's been happening. You can see the big drops that we had. You can see the close on the low Friday. I'm going to fast forward now. Typically, when you get this type of selling, you're going to have a rally, maybe Monday, and you're going to have a retest Tuesday, Wednesday, somewhere along the line, fairly short order. You're going to retest this low from Friday. Never happened. The most retesting that we had, gap up on Monday, and then we filled the gap from Monday. That was it. We were off to the races. Tuesday, boom, gapped higher, never even came back to test the opening price. Very unusual. Typically, after a lot of selling like this, you get a gap up, you'll have a little bit of a rally, but then all of a sudden you'll come back in and you'll fill this gap because you've seen that super heavy selling last week. That was the heaviest selling that we've seen since October. So it was not just a one-day event. There were a couple of really wicked days where the market fell apart. So the market rallies yesterday and then it compresses. Today, the market tried to make a new relative high. It barely got through the high from yesterday. We had a tiny little pullback on the close. The good news is that we have new information, and that information is that buyers are in control. There's no question about it. When you get this type of price action, that means that everybody Friday came in Monday morning and said, this is a big time buy. Buy, 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 buy. There's no reprieve. Sellers don't even test the water. They're like, oh my gosh, this bid is so strong. Don't sell anything. Let it run. And that's where we stand right now. Unfortunately, we've got a position in the VXX that's really getting pounded because we've had this snapback rally. So take a deep breath, talk a little bit about the market. I have been super cautious, and I've been saying all along in here, I don't know which way this thing's going to go. I don't know. It could blow 300 S&P points higher. It could drop 300 points, and I could make a case for either one of those scenarios. Huge volatility. All the short squeezes that we had last week, price movement all over the place on big volume. So what do we do now? Well, I know that the bid is going to be very strong. Democrats are probably fueling this move because they've said, with or without Republicans, we're getting a stimulus bill done and we're going to go big. That's been repeated by Chuck Schumer. Janet Yellen's all for it. Everybody's on board. Let's do a huge stimulus bill. That is going to throw gasoline on this fire because the economic numbers haven't been too bad. We saw ISM manufacturing very healthy this week. ISM Services today, very healthy. ADP expected 50,000 new jobs, 174,000 new jobs. So even though the coronavirus had been spreading rapidly and a lot of states were shut down, business was still being transacted. Now that the vaccinations are taking place, this economic recovery could get underway in another month or two. I think that cyclical stocks are going to be a place to be. But right now, where we stand, the VXX got absolutely destroyed the last 3 days. So our first matter of order is that we have to take care of that VXX position. I'll put up a chart of it, and I expected that we were at least going to get some type of market sell-off on Tuesday, maybe even today. We had orders out there to try and sell our VXX position, and you could see it popped up and it just got obliterated. So we've got to try and exit this position. Our hedge was effective while it was on, but instantly Monday, that got thrown right in our face. And it also does speak to why you do not want to short this market. You do not want to short it. And when I tell you that these snapback rallies are violent, this is exactly what I'm talking about. So you've got a choice. If you feel that the market is ready for a sell-off, you either go to cash and you wait for that pullback, or you start taking positions, bullish positions, because you feel that that support level is strong and the market's going to continue to go higher. But you do not buy puts. You do not short. So we'll take a look at the VXX position, and I've got it loaded up for you here. You can see the March 19th expiration, $18 calls, closed 192, 199. We bought those at $3.85. We're going to put an order out there. We're going to try and sell these for $2.50. I'm not extremely panicked about this position right now because we do have time. So on the staged order entry screen, you're going to see an order to sell the VXX for $2.50. That's a day order. I don't know. We might have to bail on this thing and sell them in the next couple of days and just puke them out, establish the loss, and move on. So, not a good position for us. We never got any kind of retest on that selling. That's what happens. But we do have new information, and that's the good news. Now we know that that market bid is super strong and that we can continue to sell some out of the money bullish put spreads. But look at how far the market's run back in just 3 days. I still want to see if we get a little bit of a reprieve. It's going to be a little bit of a disappointment to you to hear that I'm not doing a lot of new trades tonight. I'm doing one, but this is going to be piecemeal. I see a pullback, I'll put an order out there to get another trade done. Pullback, I'll put another order out there. It's going to be a day-to-day basis. I have to make sure that the next trades are winners. We're in a hole right now. We got to get out of the hole. A lot of you have asked me in the past, I've had a drawdown. What do I do? How do I get back on track? That's how you get back on track. The easiest way to get out of a hole, stop digging. So we want to make sure that we're not putting our head right back in the noose only to have the market pull back again. And we still have another position that has yet to play out. And I'll address that in just a second as well. So we'll draw the upward sloping channel here so that you can see where the prices are. And there's the lower bound of it. And here's the upper boundary right here. And we can expect the market to stay within this upward sloping channel. It's probably going to grind higher. We should try and test that all-time high. I'm thinking in the next week or so. Democrats today said that this stimulus bill that they're going to pass, it's not a matter of months, it's a matter of weeks. So that tells me that they've got their pedal to the metal. They're very serious about it. If it's anywhere around $1 trillion, that comes after a $900 billion stimulus bill that was approved in December. the market's going to really like that news and it will take off on that news. So I am looking to fairly aggressively get long. I may even consider buying some calls, but I don't want to do it today. I want to see how this Netflix trade pans out, and I do have one trade that we're going to look to put on. We've also got to bail out of the VIX position. I want to establish the loss. I want to know how deep the hole was, and then I want to start looking at what we might be able to do to capture some of this upside. So the Netflix trade, we had a bid out there to try and buy the bullish put spread back for 50 cents yesterday. Stock made it all the way up to $555. It was out of the money. We weren't able to get filled on that at our price. I thought, you know what? Let's cancel it. We've got a nice higher market on Wednesday. Looks like the opening's going to be strong. Netflix put in a really good day here. It had relative strength last week. I think this thing is going to finish above $560 today with that strong market tailwind. What did Netflix do? Not. It sold off the whole day. And it is a very choppy stock. A lot of random, choppy back and forth price patterns. We need the stock to rally. There's no point in us. It's $10 in the money right now. There's no point to us even having a bid out there right now because we'll end up paying probably $2.40 to buy that back in. We're not going to do that with 2 days left. We're going to sit. We're going to see how Netflix does tomorrow, puts in a good day. Even if it gets back up to $300 or $545 on Friday, it's still got a chance to poke through. We do have a chance to have this spread expire worthless. I will give you day-to-day updates on what to do with VXX and Netflix. So our first matter of business is we've got to exit those positions and establish our loss. We do have a new trade that I'd like to put on, and I feel that the cannabis stocks are so dang hot right now that is one that we're going to take a look at. And the way that I found this is I simply went back. I wanted to find stocks that have been strong relative to the market. And I'm going to show you a number of stocks that I had considered. I used earnings date previous. I went back to January 4th, and then I went to today's date. So I wanted to make sure that these companies had already reported earnings. Wanted to make sure there were weekly options, and I wanted to make sure that the option liquidity was good. And then I also wanted to make sure that the stocks had relative strength. So they're strong relative to the market, good option liquidity, weekly options, and they've already announced earnings, so we don't have to be tripping over those earnings announcement dates. Let's take a look at some of these, and I'll show you some of the stocks that I like. Google announced yesterday, really nice reaction. FCX looks good to me. And I had contemplated doing a trade. These trades will be out there. If I like what I see in the market and the market breaks out, new all-time high, I am not going to hesitate. I will buy that breakout. I've just got a really hard time doing it right now after we're taking a hit in the account and after we saw some really heavy selling last week. So I want to err on the side of caution. There's a lot of random movement out there, a lot of cross currents. I don't want to be caught in it again. I'd rather be in cash. If we get another dip, boom, 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 I can put those trades on with confidence, knowing that that bid is solid. But I do like FCX. You can see this is a bullish flag formation. It's broken through the downward sloping trend line. I would look to maybe get in FCX. This is a cyclical stock, basic materials, lots of operations in Australia. That means that they service China. China's economy is really performing well, much better than the rest of the world. I think that FCX is going to benefit from that. So that was a stock that I was considering tonight. Google, big rally right through that horizontal resistance. Google, I would look to sell an out of the money bullish put spread, but the stock has got to come back in a little bit, and then I would look to sell that bullish put spread right around that 1920 level. Caterpillar also announced. Let me go to the top of the list. That was another consideration. This is another cyclical stock, but I looked at their earnings. Their revenues were down 20%. So yes, this would be a play that, hey, we're going to get a big infrastructure bill from the Democrats and Caterpillar will benefit. You've got a nice horizontal resistance point there that ended up being support right in here. There's your earnings report. Nice price action there. Downward sloping trend line, breach to the upside. Yes, I could see selling a bullish put spread down around the 182.50 level. So we get a little bit of a market pullback, you can expect that we're going to boom, 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 get some trades done. Take a look at some other stocks that I liked. ABBV, there you can see APHA, that's one that we're going to do a trade on. Earnings announcement here, nice horizontal support. That holds, stock looking pretty good. Going to continue to go down, take a look and see what else I can recall that I looked at that I thought might be good. LVS is starting to look interesting, but it's been really hammered. If the economy starts to recover, this will be a good stock. Downward sloping trend line breach to the upside. Also testing this was horizontal resistance. Now it'll be support. I want to see it put in a few more good days before I get in on something like that. Take a look down here as I look through the list. I'm going to go right to APHA, and we're going to take a look at this trade. My thinking behind this trade is that, number one, the company's already announced earnings. There was a favorable reaction to it. The market sold off hard last week. This stock did not flinch. So if there was going to be profit taking, we would have seen it last week. Didn't happen. That tells me that this stock is ready to go higher, but I'm not just going to buy calls on it. I want to sell an out of the money bullish put spread on this, and that will be our first trade. So here's the trade we're going to do. We're going to sell we'll sell the APHA February 26th, 12.5 puts. We're going to buy the 11.5 puts, and we're going to do that for a 20-cent credit. So 12.5, 11.5, and let's take a look at that. And let me put the stock symbol in. And we'll get those option quotes. First, I have to spell it correctly. There we go. And we're going out to the February 26th expiration. So this will be a 3-week trade. And we're looking to sell the 12.50s, buy the 11.50s. There's $1 between the strike prices, so I need to get 20 cents for that. Put the 20-cent credit up here. And I'm going to be doing this so my margin requirement on that is going to be 80 cents. I'm going to be doing 12 contracts. And let me put that up there. So we're going to be doing 12 contracts in the model account. And to recap the trade, APHA, we're going to be selling the February 25, 12.5 puts, going to be buying the 11.5 puts, doing that for a credit of 20 cents. And there, I've submitted that trade. So that will be one of our only trades this week, unless I see something I really like in the market. And if the market shows a nice breakout, I've got the other trades already queued up in mind, what I want to do, and I will send after market hour trading instructions for you to enter the trade. As far as APHA long term, I don't know how profitable these cannabis stocks are going to be. I don't know what the profit margins or the competition is going to be, the licensing issues, so forth and so on. I really don't care. Right now, retail investors are in the market in a very big way. That's why we saw all of the short squeezes last week on GameStop, AMC. So we know that retail investors are in the market. We also know that investor margin borrowing on a dollar basis is at record high levels. And that's why you're seeing them flock into solar stocks, EV stocks, pot stocks, some of the biotechs, all of the space names. SPCE has been a really hot stock. A lot of those still have earnings coming up, and I did take a look at a number of them. They've got really high option implied volatilities. Why? Well, because these stocks don't have fantastic earnings, but right now what's fueling the stock is investor demand. And the fact that this company's already reported earnings and had a favorable reaction, that makes me pretty confident that this is going to be a good trade for us. Now back to that spread, you can see that it's 8 cents bid offered at 54 cents. I think that a 20-cent credit might be doable here. So let's see if we can get the trade done. This trade will be good through Friday. If we're not filled by the close Friday, we're going to cancel the trade. And I'm going to keep looking at other stocks that I think might be good. We've got earnings are ramping up, so we've got more and more earnings happening every single day. I need to make sure that the market is going to rally. Any little dip, any little pullback, I'm going to be watching with bated breath, waiting to jump on any of these plays. And I want to make sure that when I do see a little bit of a market pullback, even if we come back to this 380 level to test it briefly, any kind of pullback, I'm just looking for relative strength in some of the stocks that I've mentioned to you. That'll give me the confidence to go in and sell another out of the money bullish put spread. Until then, let's say that we never get one. And let's say that the market just boom, boom, boom through the high. If that happens, we know the volume's there. If that happens and we easily clear this previous high, and I'm talking long green candle closing at a new all-time high, I may even buy SPY calls. That's how bullish I think this could be. So again, we've got new information. We took a hit. That market decline, it could not have been more untimely. We'd had these spreads on back in here. These were 2-week and 3-week old bullish put spreads. Grind, 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 tick, tick, tick. Everything's looking good. Here we are, 3 days from expiration. Wham! Okay, well, that's all right. We can adjust our positions, but I did not expect that type of reaction. And so that's causing us some headaches right now, but this is going to pay dividends long term because now I know that this bid is super, super strong, and any little dip, any little pullback that we have can be bought. And that's what we're looking to do. We don't want to chase right now unless we get just incredible breakout through this high. Then I think we go and we go hard and we go fast. We'll be in call positions, probably aggressively taking profits on them, not waiting a whole long time because this, who knows, it could be another buying climax, but a buying climax would be actually big. It would take us right through SPY 400 at this stage. So we're not talking about a little upside. We're talking about an explosive move higher, probably a lot of short covering because there were probably some people that got short here. Now they're trapped. That pullback right there could be what fuels us up and through. So that's all I've got for you this week. Again, we've got a little bit of a hole. We need to see how the other two trades play out, VXX, Netflix. Let's establish the loss. We've got another little trade working. If there's anything throughout the course of the week that I see, it's not that I'm just going to be doing videos on Wednesday nights. I want to get back on track. I want to get back on track right away. We've got a very volatile market, so we got to roll with the punches, see how things play out. Thanks so much for watching. If you're watching this on YouTube, you're able to see it a couple of days after it's been recorded. If you like the content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications. Thank you. Good night. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.